Hello, everybody. Welcome to the June 11th issue of the Tucson Mortgage Weekly. I am Todd Abelson, back from a hiatus. I actually hadn't recorded this for a while, if you hadn't noticed, but several people sent me emails and telephone calls and said, "Hey, Todd, what happened to your weekly newsletters? Please send it out again." So to those of you who are actually listening to it, thank you very much. I feel honored to be able to bring you some worthwhile news. For those that aren't listening to it, well, you're not going to miss anything because you weren't listening to it before. But anyway, okay, so let's make this one short and sweet. Last week was a pretty important week. A couple of things happened that were of key importance. First, middle of the week, the European Central Bank basically cut rates to the point where they're now negative. So if banks park money in each other's banks overnight, they actually have to pay a fee to park the money. And what they're trying to do is to force the banks to lend the money out to spur growth in the economy. So what better way to spur growth than to charge people, banks, not to loan it? So they're forcing them to loan it. My question is, well, they're not going to pay a fee. What are they going to do? They're going to start putting the money into various risky overnight investments. Who knows what that'll bring? Stay tuned on that. Okay, the other thing that happened is that the employment report was released, and the good news on the surface was that there were 217,000 new jobs created in May, which was actually a very good number. But there's a couple of questions in my mind. Number one, what kinds of jobs? Because if we've, over the last 6 years since the Great Recession, if we've lost 8 million jobs at 60,000 a year, for example, and we've gotten them all back at 40,000 a year, that means that people have lost income even though they're back to work. Still good, but first question is, well, what's the quality of the jobs? By the way, there is a note that with that 217,000, allegedly, statistically, all of the jobs lost have been recovered. So that's more than 8 million jobs. But the question is, what kind of jobs? The other thing that was of note with the report was that the participation rate, which measures what part of the potentially working population is actually participating, it matched a 36-year low, 62.8%, which means the other basically 37% of the potential working population that could work, they're not even looking anymore. They've given up. So while these numbers appear to be good on the front, behind the curtains, they're really not so good. So economy really, as much as the stock market's doing well, and I think everybody's trying to figure out why the heck that's happening, certainly things are not chugging along all that well. Big stuff in the news right now is suddenly student loans are all the rage. It's depressing home buying, it's depressing the economy, all of this. And I agree, there are people I see with a huge, gigantic amount of student loans. But the average person, student loans, you have 20, 25,000 and a payment to $350 a month. I mean, that's basically like a car payment. There's nothing, in my opinion, that's going to stop them. I mean, if they had an extra $300 in their pocket, they're not going to suddenly buy a house. So we need to stop bombarding the just graduated folks with the fact that $350 is too much of an expense for you to buy a house. Of course, they have to have a job, so see rule number one, got to have a job. Anyway, keep your letters and cards coming in. Thank you very much for watching. Don't forget to check out the website, TucsonMortgages.com. I'm Todd Abelson. Thanks a lot. Make it a great day. Bye-bye.